Ladies and gentlemen, welcome back. This is Christopher Aaron. It is November 13th, 2019. The point of this channel is to show you in a visual format where we actually are in the precious metals markets, trying to take out a lot of the hyperbole, a lot of the rhetoric and emotion that appears in other formats. You know what I'm talking about. So we look at things visually here, and I believe this week it is extremely important for you to pay attention to the gold price. I believe that we are in a window here of perhaps several weeks, maybe a month or two more, where it is time to finalize your metals portfolios for the move that is coming ahead. I think a significant further advance is coming shortly in front of us, so it's time to do the work now to finalize that. I'll show you why in a moment. Let us look at the metals over the last 3 days. Gold, this is very constructive price action. You know, we keep seeing these nominal new lows being made here, 1445, the recent low for this move, for the decline which began in September. Nominal new lows forming here, sentiment getting worse and worse and worse. But really, it's just a grinding kind of decline. This is exactly the kind of thing that I wanted to see into this low. Switching over to silver, we're seeing a slight outperformance by silver the last 3 days. Holding above some key support. It's being tested right now. Go back to 2 weeks ago, the video, and you will know exactly what I'm talking about. Both of these metals look constructive. And when I say time to finalize your portfolios, what exactly am I talking about here? Let's pull up. On the top, we are looking at gold from 2011 to the present. So this is going to apply if you're a stacker, if you're a physical metals investor, and also if you are investing in the gold mining sector or the silver mining sector for that point. We're looking at that at the bottom. Just a comparison between the two. 2011 peak, the all-time high in gold is priced in US dollars to the present. Now the major point about where we are visually looking at this market, looking at the 4.5-year bear market, this period of grinding price action from 2013 through the present. And where are we now? So we had this resistance zone, right, dating all the way back to 2013. It was 1434 exactly in the futures market was this high from 2013. But we can see that there were related peaks. This peak in 2013, this peak in 2014 here, a few dollars less. The peak in 2016, right, about $50 less than the peak in 2013. These peaks in 27 and 2018. So, I mean, when we see so many peaks like this matching up within a zone, is it clear what I'm talking about here? There was a resistance zone. Not just one exact price, but there was a resistance zone for 6 years. And that zone was broken out right here just 3 months ago. From that breakout at 1434, we had a 1-month surge into September, bringing us about $130 higher, and now we've had this 2-month correction. I strongly suspect, nothing is guaranteed in this world, but I strongly suspect that after a 6-year base, a 1-month surge after the breakout is not all that gold is going to do for this move. What are we seeing right now? This is the retest of this breakout zone. What am I talking about? Here was the breakout. We're coming back to retest that zone at 1434. What is a retest? This is just when, this is a term that we use in technical analysis. We're talking about when a market comes back to an important former resistance level that was broken higher. It comes back. You literally have the sum of the gold market asking those buyers who showed up here just 3 months ago, are you sure? Are you sure you meant to buy gold at 1434? Was that for real? And so we're getting a second chance here. And after these 1, 2, 3, 4, 5 attempts, the bias has to be that the buyers are going to show up here again in gold at some point. The low could already be in. These are hard to predict over the very short term exactly where the retest is going to come. The lows could already be in. The lows could come a little bit further and grind a little bit in toward the end of the year. But from a highest probability bias at this point, after this retest is in, we should be looking at significantly higher targets for gold into 2020. I'm not going to provide you with how I've calculated this target zone here. We have looked at that in the premium service. If you want to know more about that, you can find more on the website. This is my target zone for gold, and we will look at this periodically as we approach. Of course, my premium subscribers, you will know exactly when we get the signals that we are coming into this zone, and you will know when we start to take defensive action. For the time being, it looks like after a little bit more grinding to retest this breakout, gold will be advancing strongly again into another wave higher, another back off, and then reaching this target zone, which I have as at least above 1,700. This is what I'm looking for in my book. Again, is this 100%? Absolutely not. Nothing in the investment world is 100%. This is the strongest takeaway that I have for gold at this time based on all the observable evidence. Now, when we look at the gold miners and you look at this right below, there's that same relative resistance going all the way back to 2013, the peak in 2016. Notice how the gold miners are still lagging. So the thing is, I've been noticing this lagging here for the last 2 years. It looks to me like based on the price action in gold, we are going to get a significantly higher target for the gold miners. So this is the time to be finalizing your portfolios if you are also in the gold and silver mining sector. You want to be finalizing it into these lows because the next surge, I think, in a process takes us to significantly higher targets. And you say, well, is this realistic for the gold miners to move, let's say, from where they are right now, 25, 26 in the GDX, up into this range, the 50 range? Look at how quickly this moved on the way down. From the 50s all the way down here to the low 20s within 8 months. You better be certain that things can move in the opposite direction just as quickly. So this is what is coming. And then I suspect that into 2020, a lot of you guys are going to stop liking me as much as you like me now. Why? Because I am going to be getting defensive once we're sitting on profits here into 2020. And some of you who claim to like technical analysis, but you really only like it because I'm talking about higher prices, you're not going to like it so much about a year from now. But that's okay. I'm not here so everyone can like me. I'm here so that we can talk about what we are seeing on the charts and prepare ourselves as best as we possibly can for the future in the precious metals markets. So it is time right now, literally, to finalize your portfolios for the next wave higher. If you miss this, if you're watching this right now and you're like, well, maybe I have 2 or 3 months more, I'll start thinking about it after the new year, after I get my tax refund. Listen, this is a no whining zone. If you miss this move here that's coming up, I don't want to hear about it 3 or 6 months from now. I have a strong sense that we're moving higher now. If you come to me in 6 months and you say, oh boy, I missed, a significant portion of that move, should I still buy in now? I'm going to tell you the truth, which is probably not. And then you're not going to like yourself for having missed this move. Let's get rid of this. This is a no whining zone. We're preparing for this right now, and I suggest you do the same. We do issue a premium research service that contains videos like this in much more depth. We also cover the exact miners that we are investing in here, the exact ETFs that we are investing in, all the latest, not only on gold, silver, but the US dollar and the US stock market. Huge data point coming into the US stock market over the last week. When we look at that stock market breaking out of the expanding megaphone pattern, premium subscribers, you know what I'm talking about. We're setting the stage for something dramatic here in U.S. stocks. So let's get ready for that over the next 1 to 3 years. If you have a unique situation, if you would like to talk to me one-on-one for that matter about anything under the sun, please know that I'm available on a one-on-one basis. I take no fees from any of the mining companies, any of the ETFs, any of the vault or storage programs. I am simply an independent precious metals strategist. I spend either 30 minutes or 60 minutes with you. We sit down, we talk soup to nuts. I care about my individual clients. That is what I do for you. You can reach me on the Consultations page. Make sure to hit the subscribe button to this YouTube channel to tune into these free videos, because things are going to be getting exciting here into the next 6 to 9 months, and I want to make sure you don't miss these free updates when they come out. Last but absolutely not least, if you are donating to the free videos on Patreon, my heart goes out to you. I say thank you, and thank you. It really means a lot to me. Everyone watching, this is an exciting time in the metals, but I really want you to think about this from a business standpoint. We have this setup. We were looking at a 6-year base. Just think about that for a minute. A 6-year base in gold. We're coming back to retest that right now. You can see that on the charts. That's the point of this channel, is to let you see what is actually happening in the precious metals markets, not just talking about rhetoric or whatnot. We can see that 6-year base breaking out. We're getting the retest right now. This should be the last decline before significantly higher prices. So let's prepare for that now. Thank you very much for tuning in. I hope to see you this time next week.